I'm Mary Kramer, publisher of Crain's Detroit Business. We're so glad to have you with us today. Crain's readers tell us there are two common problems: finding customers and finding financing. Today, we're going to talk about money. Since traditional financing is harder to find for many companies these days, especially startups and second-stage companies, we thought we'd spend a few minutes exploring some innovative and alternative ways to access capital. I'm here with an expert from Hennessey Capital who will help us look at financing options. Today, we're going to discuss asset-based lending with Toby Dahm, Senior Vice President of Hennessey Capital. Welcome, Toby. Thanks for being with us.
Well, it's my pleasure to be here, Mary.
Hennessey Capital is really energetic about asset-based lending. What is asset-based lending? How would you define it?
It's a specialized form of lending where we focus more on the collateral that our clients generate as opposed to their past financial results. And this enables us to work with clients that don't fit the criteria of banks. And in Hennessey Capital's case, we focus on companies that have accounts receivable and inventory, which is referred to as working capital.
So what types of companies use this type of lending?
Any company that generates working capital and is in a growth mode. And this covers a broad range of industries. We do a lot in the service field, particularly those that are labor intensive. We also handle distribution companies, manufacturing companies, and transportation companies, such as trucking companies, as well as many others. But the ones that I mentioned are most prevalent in our portfolio.
What's the difference between asset-based lending and factoring?
Well, asset-based lending is a loan. And we're looking for clients that have established their viability, that have proven accurate reporting systems. And the benefits to moving into an asset-based loan are a lower cost because there's lower monitoring involved. And also, we can broaden the base of assets we're lending against and lend against inventory, which provides more funding to those clients.
So give me an example where Hennessey Capital helped a company using asset-based lending.
Sure. We had a client 4 years ago that approached us that distributes and processes chemicals, and we provided funds that gave them more access to capital than their existing lender did. They used these funds to increase their sales, and because of the increased sales, we had more collateral to lend against, so we immediately provided them with greater funding. This whole thing cycled upward very quickly, and we greatly accelerated their revenue. In fact, over that 4-year period, they went from $2 million in revenue to $12 million in revenue, and today they are extremely profitable.
Do you think we'll ever get back to traditional bank financing for small businesses?
Well, I think there has always been a good role for asset-based lending for second-stage companies, especially those in a fast growth mode. And while traditional banks may be coming back, and they are, asset-based lending provides more capital and is a great solution for those fast-growing companies. As an additional benefit, we instill disciplines in those companies that are going to be necessary when they are ready to move on to the traditional banks, such as monthly reporting. So it's a great training ground and preparation point for traditional lending.
Thanks, Toby, for a great overview of asset-based lending.
It's my pleasure. Thank you for having me.